We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more. We're going to win more. We're going to win.
Hello friends, welcome to the Adkup Show. Today we are diving into some troubling developments in the global stock market with a particular focus on the United States, where we have witnessed a massive sell-off. That means market has crashed. Donald Trump's words are making investors very nervous, and chances of recession and inflation are growing rapidly in the US. So without wasting time, let's try to dig this bloodbath and understand why this is happening. Right now, the US indexes like the Dow Jones Industrial Average, the S&P 500, and the Nasdaq are flashing red, signaling a significant downturn. Let's start with the numbers. On Monday, March 10th, Wall Street experienced its worst day of the year so far. The S&P 500, which tracks the top 500 US companies, plummeted 2.7%, closing at approximately 5,778 points. The Dow Jones dropped 2.1%, shedding over 900 points to close at 42,592, while tech-heavy Nasdaq Composite tanked by 4.1%, its steepest single-day decline since September 2022, ending at around 18,285. This wasn't one-day blip since its peak on February 19th, when the S&P 500 hit a record high of 6,200 points. It's now down about 8.6%, wiping out over $4 trillion in market value. To put that in perspective, the entire market capitalization of the Bombay Stock Exchange, which is India's stock exchange, is around $4.5 trillion as of early 2025. So in just a few weeks, the US market has lost nearly the equivalent of India's entire stock market. Now let's unpack why this is happening, what triggered this crash, and how it's rippling across the globe. A major driver of this decline is US President Donald Trump's recent remarks and policies, particularly around tariffs. But before we dive into that, let's rewind a bit. So when Donald Trump won the election in November 2024, we can see here that markets soared. This happened because investors were gaining confidence as Trump has made a lot of promises about economy during his campaign. Investors were optimistic, expecting tax cuts, deregulation, and a bring back manufacturing home agenda that would boost the US economy. As a result of this environment and promises, the market started rising quickly. Now, after he took office on January 20, 2025, this Trump bump pushed the S&P 500 to its February peak. Here we can see how the stock value raised rapidly. The US dollar strengthened, and there was a talk of factories returning to American soil, creating jobs and prosperity. Basically, Trump took everyone into confidence that his policies would be great for the US economy. To be honest, even I was expecting things to go smoothly without much bump. But fast forward to March 2025, and that optimism got evaporated. We can see here that there is a steep decline in value. The S&P 500, once at 6,200, is now hovering around 5,778. That's a drop of over 400 points from its high. The Nasdaq, meanwhile, has officially entered correction territory, down from more than 10% from its December 2024 peak of over 20,000 points. These figures are showing that things aren't smooth, and there's something really bad about Trump's aggressive policies. Now, I'm not saying whether Trump's policies are right or wrong. I'm just saying that things aren't going as expected. So now the question is, why the sudden reversal took place in stock market? Well, the investors are largely tying this up to Trump's aggressive tariff policies and the uncertainties they have unleashed. Here's what happened on March 9th. Trump appeared on Fox News and was asked about the possibility of recession in 2025. Instead of brushing it off, he gave a vague response saying, I hate to predict things like that, and hinted that US is in transitional phase to bring money back home, which might involve some pain. Investors interpreted this as a signal that he is willing to risk economic turbulence, including a potential recession. He said all this in order to push his trade agenda. Here's what he exactly said.
Because there are rising worries about a slowdown. You've got the Atlanta Federal Reserve saying we're going to have a contraction in the first quarter. Look, I know that you inherited a mess, and you said that the other night.
I've only been here,
but
for a
are
while.
you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing. And there are always periods of, it takes a little time. It takes a little time. But I think it should be great for us. I mean, I think it should be great. It's going to be great ultimately for the farmer, you know.
After this interview with Fox News, it was natural for markets to react, and that's what happened. The markets reacted swiftly. On Monday, that is March 10, the S&P 500 fell by 2.7%, the Nasdaq dropped 4%, and guess what? Tesla alone lost $125 billion in market value in a single day, closing down 15% at around $260 per share. That's a staggering decline for a company led by Trump's ally Elon Musk. By the way, Elon Musk is continuously supporting all the policies of Donald Trump. A lot of people have started hating Tesla and Elon Musk's other companies because of his behavior. His agency, DOGE, that is Department of Government Efficiency, has been very aggressive. It has fired thousands of federal employees. This kind of aggressive behavior is creating hate and discontent among masses. People are blaming Elon Musk for influencing Trump and acting as an unelected president. Situation got so bad that Trump has to come out in the support of Elon Musk. He literally did an advertisement for Tesla in front of the White House.
I'll watch Secret Service go crazy. Thank you.
I mean, if you actually drove it around, it would really be wild.
Wow. That's beautiful. This is a different panel than I've had. Everything's computer. That's beautiful. Wow.
So this is the current situation of the US. We don't know why would the president of the US will do an advertisement for Tesla cars. It looks like Elon Musk has too much of influence in Trump administration and people are not liking it. Now moving ahead, Delta Airlines also issued a profit warning, cutting its first quarter forecast due to macro uncertainty and declining consumer confidence, further spooking investors. This kind of turbulence in the market is hinting at there's a high possibility of things getting bad. Trump openly accepting this makes the situation worse. So what's driving this panic? First, Trump's tariffs. Since taking office, he has imposed, suspended, and reimposed tariffs on major trading partners like Canada, Mexico, and China, who account for around 45 to 48% of US overall trade. On March 4th, he enacted 25% tariffs on Canadian and Mexican imports and a 10% levy on Chinese goods, with more threats looming, including a 50% tariffs on Canadian steel and aluminium, got announced on March 11th. Earlier, it was 25%. Trump increased it to 50% because Ontario decided to charge 25% more to electricity, which it sold to few northern states. After Trump increased the tariff, Ontario backed off. Now we'll have to wait and see if Trump reduces the tariffs or will he continue with 50%. Now, these confusing, uncertain, unstable, and flip-flopping policies have put businesses and investors on edge. They're not sure about how to plan for the future. Economists warn that tariffs could raise consumer price by 0.6% to 1%, stoking inflation at the time when Federal Reserve is already grappling with a sticky 3% inflation rate, which is above its 2% target. Speaking of the Fed, they have added to uncertainty. On March 5th, Fed Chair Jerome Powell signaled a pause in interest rate cuts. saying they are waiting to see what policies are enacted. After 3 cuts in 2024 brought the benchmark rate to 4.25% to 4.5%, markets had hoped for more relief in 2025. But with tariffs threatening inflation, the Fed is holding steady, which means borrowing costs remain high, investment slows, and economic growth takes a hit. This will directly affect the consumers. Then there's the job picture. The latest US job report released on March 7, 2025 showed only 151,000 new jobs were added in February, which is down sharply from 271,000 in December and well below expectation of 200,000. This slowdown, combined with rising layoffs, like in February, around 172,000 job cuts were announced, which was the highest since 2009. This has fueled fear of an economic stall. The Federal Reserve Bank of Atlanta's real-time GDP tracker even suggests the economy might already be contracting at a 2.8% annualized rate. 2.8% is not a small figure. It means there might be a high inflation and large unemployment. Tech giants have borne the brunt of the sell-off. Nvidia, a darling of AI boom, fell 2.6% on Monday, bringing its 2025 loss to 18.3%. That's a stark contrast to its 820% surge over 2023 to 2024. Apple dropped by 3.2%, dragged down by news that its AI-powered Siri update is delayed until 2026. Tesla's 15% plunge erased $125 billion, leaving it 45% below its December 2024 peak. Investors are now in a wait-and-watch mode, jittery about inflation, interest rates, and Trump's next move. The White House tried to calm the storm on Monday, issuing a statement that there is no real risk of recession. Well, there is a big risk, and that tax cuts and investments will soon lift wages and growth. All this is happening in US stock exchange is also having a very negative effect globally on all the major economies, especially those economies which are the US's largest trading partners. The $4 trillion US stock market wipeout on March 10-11 triggered a global domino effect, with Canada and Mexico hit the hardest by direct trade impacts. Canada's main stock index, the TSX, fell to 4-month low, dropping 2.57% as Trump doubled tariffs on Canadian steel and aluminum to 50%, alongside a 25% tariffs on other imports. Mexico's IPC index dropped by 3.1% on March 11 as 25% tariffs on Mexican imports took effect, threatening industries like automotive manufacturing, which relies heavily on US supply chain. The Shanghai Composite Index fell 2.8% on March 11, erasing $300 billion in market value, as fear grew that US tariffs would shrink demand for Chinese exports, which accounts for 18% of its GDP. Japan's Nikkei 225 sank 3% on March 11, losing $60 billion in value, driven by declines in export giants like Toyota, which is down by 4%, and Sony, which is down by 5%. With 15% of Japan's exports going to US, tariff threats raised fear of reduced demand for autos and electronics. Foreign institutional investors, that is FIIs, have pulled out over $12 billion from Indian markets in 2025. This happened because they were spooked by US uncertainty and a stronger dollar. Even the European stock market lost a lot of money. Asia reeling from export fear and Europe grappling with secondary shocks. Emerging markets faced currency and commodity pressures, while safe havens assets like gold and the US dollar gained. The root cause for all of this is Trump's erratic trade policies, which has injected unprecedented uncertainty, promoting a synchronized global sell-off. If unresolved, this could shave 0.5 to 1% off global GDP growth in 2025, with tech, automotive, and commodity sectors most at risk. Markets remain on edge, awaiting US inflation data and further policy clarity from the Trump administration. So finally, what's the advice for the investors? Well, experts suggest pivoting to domestic-focused stocks like banking, infrastructure, and consumer goods over export-heavy sectors like IT and pharma, which are vulnerable to US policies. So where do we go from here? The US markets faced hinds on Trump's next tariff moves, the Fed's rate policy, and whether consumer confidence hold up. For other countries, it's about weathering the storm by balancing global stocks with domestic resilience. This is a fluid situation, and as it unfolds, it'll keep impacting markets worldwide. I hope this breakdown has shed light on what's happening and why. If you found this insightful, then don't forget to hit that like button and subscribe for more such insights. What do you think going to happen in near future? Will economies get stabilized or will they further tank? Share your thoughts in comments and stay tuned for more updates as we navigate these choppy waters together. Peace out.